The reason I have the Southwest jet behind me is that the CEO of Southwest Airlines has declared that we are in a recession. And this is an important one because Southwest Airlines is a domestic carrier. Today we're going to talk about earnings, what's happening in the earnings season. We'll take a look at the market update and what we should expect coming up shortly. Last week was a positive week for the S&P 500. We see here that Monday was the only down day, and then we saw on Tuesday that Trump basically came out and said that 145% tariffs for China were too high and they would be coming down. There's a lot of confusion after that, but nevertheless, the market headed higher for the week. If we take a look at the S&P 500, it was up 4.6% last week. Now, it was a real risk-on environment, so we saw the technology sector was the top performing major sector for the S&P 500, and as you would expect, the defensives were all at the bottom of the list. If we look at the major markets here, we can see the NASDAQ up 6.7% last week. That's incredible. The TSX was, compared to the S&P 500, it was a weak performer. It's only up 2.1%. It's a little bit of a flip because we've seen the TSX outperforming the S&P 500 recently up until last week. Europe was up 2.8, China 3.3, and emerging markets 2.8. So the markets were generally up, just not as much as the S&P 500. If we look at some select subsectors, we see the semis were up 10.1%. Gold was just slightly negative. Now, we saw a lot of volatility with gold last week. One day it was up a lot, the next day it was down a lot, and fairly flat for the week. But when we start to see some volatility, it could mean that it's in a temporary topping pattern at this time or coming up shortly as well. Something to watch out for, especially since we're moving into the weaker seasonal period for gold, which is really May and June. Those are the two worst contiguous months for gold. If we take a look at the yield on the 10-year Treasury note in the U.S., it closed lower for the week. The 2-year was also lower, and in Canada, we did see the yield move slightly higher on the 10-year and also on the 2-year as well. Here we can see the Canadian dollar was down relative to the U.S. dollar. It lost 0.2%. The U.S. dollar relative to world currencies was up 0.1%. So we're starting to see some stability for the U.S. dollar, which is actually a good sign for the markets overall. Okay, let's talk earnings. We are in the Q1 earnings season right now. And if you take a look here, we can see that one of the key factors is that we've seen negative revisions, a large number of negative revisions. That's not a good sign. We'd like to see positive revisions, but to see this strong trend of negative revisions is not a good sign. So analysts have been adjusting their expectations lower and lower, and the performance of this quarter's earnings so far have not been spectacular either, despite earnings being adjusted lower. If we take a look at the results so far, April 25th, 72.6% of the S&P 500 companies have outperformed their expectations. That's slightly above the long-term average, so that's really not a good number here, and especially considering the analysts have been lowering their expectations down quickly. So in other words, the bar that they've been trying to set has been lower and lower and lower, and they really aren't that strong as far as earnings goes. If we take a look at the revenue side, here we are at 62.6%, which is once again not that spectacular either. So on the top and the bottom lines, we're not seeing really big blowouts on the earnings. Google did come out with some fairly decent earnings last week, but most companies are just not coming out with really strong earnings at this time so far. It may change. We have some big companies reporting this week, and a lot of investors will be looking at that closely. I've got that coming up just in a second here. I want to show you this graph here. It's from the Federal Reserve. This is corporate profit margins. If you take a look from 1950, you can see this is a real mean regressing trend, really, all the way up to the late 1999. And then we saw the trend higher here since then. I think that has to do with just the nature of companies. What we've seen is larger and larger oligopolies in the technology space in particular, and they've demanded higher profit margins. So as a mix, that's actually come up with higher profit margins for the S&P 500 companies. And if you take a look here we saw this spike take place during COVID. That's because the government and central bank pumped way too much liquidity into the system. Consumers were flush with cash. Companies were saying, well, we're going to charge as much as we can because we know inflation is coming down the pipe, and we want to make sure that we don't lose money, basically, and we're unsure of how much it's going to be, so we need a buffer. And so we saw prices go up. They did come back down, and they have gone back up a little bit. That's about to change. with the tariffs coming in and high profit margins, what you're going to find is companies actually starting to eat the price of the tariffs into their margins. Yes, the consumer is going to pick up some of the costs, there's no question, because it is a tax. But in this case, with profit margins so high, we should expect companies to actually say, well, you know what, we have to get competitive. And we are seeing signs of slowdown in the economy. I opened this video with talk about Southwest Airlines and the announcement from their CEO saying we are in a recession. And recently we've seen United Airlines come up and say, well, here's a couple of different two scenarios. If this happens and this happens, they just didn't want to come out and say that they see some not such good things coming up. And the other airlines basically just, what we're seeing is not giving guidance. So Southwest Airlines is really interesting because it is a domestic airline. So it's not an international experience where people are avoiding the U.S. or anything. This is just showing you what's happened in the United States. And what we'd expect, once again, is that also to put pressure on profit margins if we start to see more of an economic slowdown. We are really high at the profit margin level. And with tariffs and a slowing economy, this could force those profit margins down, which would mean lower earnings coming up, something to watch out for. Here's an example of some major companies and their profit margins. This isn't gross margin, this is profit margin. This is Microsoft. Here we are at 35%, Apple at 29%, and NVIDIA at 56%. So you can see how these companies, these large companies, have much higher profit margins, therefore have skewed the numbers higher over time. But I still think we're going to start to see the overall profit margins head lower for these companies. This week is a busy week for earnings. We're right in the heart of Q1 earnings season. So far, as I said earlier, it has not been a spectacular season at all. So we really need to see some strong earnings come in to play really across the board here to really give the market a really strong boost. But let's take a look at some of the earnings coming out this week. On Tuesday before the bell, we got UPS coming out. That would give us some indication as far as package delivery goes. And that sometimes is measured really as a little bit of a lifeblood of the economy. So that's going to be an interesting one to take a look at. JetBlue comes out. I commented on Southwest earlier and a couple of the other airlines. JetBlue is a domestic airline. So we'll have to see if their comments echo Southwest, which will be interesting. After the bell on Tuesday, we got Visa coming out. So we'll get some of the transactions from consumers coming out from there. If we take a look on the Wednesday after the bell, Microsoft, well followed, obviously. Meta, well followed. Take a look at CP. CP coming out after the bell. That's going to be interesting because we have seen some of the trucking companies actually talk about how tariffs are having an impact on their business. CP, I'm going to guess, is going to make a lot of comments on that as well. Seasonally, we do start to see some slowdown coming up with the transportation sector shortly as well. After the bell on Thursday, well, before the bell, we got MasterCard coming out. Then we have McDonald's. I'm going to be watching this one here. I always like watching these fast food companies or companies like Walmart as well. Walmart, has talked about consumers shopping down. McDonald's is interesting because after COVID, they kept trying to raise the prices. Just like I showed you with the profit margin earlier, they really went at it and really raised their prices. For fast food, it got to be ridiculous. And then finally, consumers said, that's enough is enough. We just can't do this anymore. And so McDonald's came back and said, okay, we'll come out with some sales. And they talked about whether they're going to make them permanent or not permanent, but they've really struggled to really try and get their margins back up after that fact, but without losing customers, and that's what they're really scared of. So that's going to be an interesting one and see where they stand right now in the economy. Then on Thursday after the bell, we got Amazon, which is mentions the online retail, which can be very different than the bricks and mortar as well, obviously. And then we got Apple as well followed. And then on Friday, we got before the open, we have ExxonMobil as well. So busy week for earnings. Also on the economic reports, the big one would be the non-farm payroll number coming out on Friday. So a lot going on this week, very busy. But I really think we need to see some really strong earnings right across the board from a number of companies. Yes, it would help if Microsoft and Meta came up with strong earnings. Maybe that provides a little bit of a risk-on environment for investors. But I think, right now, we're starting to see some more questions around the health of the economy, the actual engine of the economy, the manufacturing of the economy. And so we need to see some of the other companies actually come up with some strong earnings. Basically what I'm seeing right here, I don't see the impetus for a very strong move upwards higher. I mean, unless we start to see, some real blowout earnings from, some of the big tech companies, and maybe that does give a bit of a boost. Outside of that, I think that, maybe we do meander higher here at this point, but we are coming up to the weaker 6-month seasonal period for the stock market. Starting in early May, which runs into October. Now, that doesn't mean the stock market's going to go down here. In fact, we've seen a really strong week last week for the S&P 500. So maybe we see the same thing here again, where we just have a carry-on effect. Maybe there's peace in the Middle East or in Ukraine or something. So a lot of these factors can happen. But overall, given where we stand right now for the earnings, I would say right now, I don't see the opportunity for huge gains to be made in the market, and I think the market's probably going to start to struggle here a little bit as it finishes off its 6-month seasonal strong period. Thank you very much for joining me today.